when it comes to actually analyzing whether or not it's time to buy in your wallet, as well as MT4, I do all the analysis off MT4 or even TradingView. The cryptocurrencies and stuff that you can't find on MT4, depending on what broker you're using, you can always go find those same price charts on TradingView and analyze them the same exact way we do on MT4 when you get to TradingView. And that way, that's how you can determine whether or not it's even time to load up in your wallet. Like, for example, last night, whenever I entered this buy here at 104, at 103 in the 105 area, I also bought more XRP in my wallet.
Gotcha.
So not only am I getting gains off MT4 spot trading, I'm also seeing my wallet increase.
So basically, you also you increase, like, so basically you getting into action on a trading point of view, but you also get into action on your portfolio as well.
Exactly.
Okay.
Exactly. Also, whenever I see, say for instance, off the MT4 spot trading, when I see crypto getting ready to take a dive, depending on how aggressive, I might sell it on MT4, but I might not sell it out of my wallet. And what I mean by that is if I see a dip coming on MT4, I might scalp it, take that, but I might not worry about the decrease that's happening in my wallet.
Right, because you understand what's going on long-term, on a long-term basis.
Exactly. So speaking on crypto, that's exactly how, and of course I analyze every chart the exact same way. Because at the end of the day, all we need to focus on is the patterns that each chart is showing us. So I don't care whether it's Euro USD, Pound USD, CAD JPY, Bitcoin, the top-down analysis that I do is the exact same for every single pair. So going back over here to XRP on MT4, now you see it's at 108. Matches the global tracker on CoinMarketCap that we just saw.
Hey, question.
Go ahead.
Why is cryptocurrencies I guess like so volatile during the weekend? Like, I mean, or is that just the opportune time to trade it? Crypto is on the weekend when the forex market is not moving around. Like, I mean, I don't understand.
That goes back to these currencies that we're tracking in the patterns in the movement that we're tracking on MT4 or any type of chart is all based on the number of transactions and volume.
Okay.
Now, when it comes to crypto on the weekends, of course, that's the only currencies that can be transacted over the weekends. You know, USD completely shuts down Friday at 5.
Gotcha.
As far as big banks, you know, banks are what generate the most transactions throughout the week. But once the weekend comes, banks are closed, so the only transactions being processed are crypto transactions, which aren't necessarily performed by the bank; they're performed by peers. That makes sense?
Yeah, it makes a lot of sense. So basically, in essence, I can also do a top down on any cryptocurrency as well, just as well as the pairs, the forex pairs, correct?
Exactly. Same with stocks.
Okay.
Like depending on what broker you're using. Here with Hugo's Way, we can do stocks. So say for instance here on stocks, let's look at Tesla. Same exact thing. Top-down analysis would be the exact same way because again, all we're focusing on are the patterns.
Got you. And I see that.
Now, when it comes to stocks and cryptos, aside from just observing the pattern, you want to keep in mind when those transactions are being done. So after you've analyzed the patterns, just pull up any chart. After you've analyzed the patterns and so forth, before you actually execute the trade, you got to ask yourself, Are there any transactions being done on this currency pair at the time? Is right now the even appropriate time to trade it? And what I mean by that is, for example, Euro, any pair with the USD, though the most transactions are going to be done during the New York session.
Right.
Transactions with the pound are going, and the euro and the Swiss franc and pairs like that, most of those transactions are going to be performed during the London session. So when it comes to cross pairs are best traded during the London session. The majors consisting with USD are best and most volatile. You'll get the biggest movement during the USD New York session when those transactions are at their highest peak. So that's why you'll see a lot of times USD CAD might just be playing around until 10 a.m. Eastern. Yep. USD CAD is one of the last pairs to move on a daily basis. Okay, USD CAD will have you sitting there at your seat until damn near noon before it starts to move. While pound USD, Euro USD starts moving around 3 a.m. If you've ever noticed that. I'm sure you've noticed that CAD is real slow and it feels like it takes all day because it's the last pair to actually move. Same with gold. Gold typically takes its move around 9, 10 a.m. as well, Eastern. And that's due to the fact. That's
what I realized.
You realized that?
It. Yeah, because I took a gold trade, I think it was like 1723 when I got in, and I came out at 1760, probably like 1760-ish. But it took I kept looking, I'm like, bro, why is this? I've been sitting at $7 for the longest. Granted, my last size is only 0.01 because gold be taking my money, okay?
Right.
But it's by far one of my favorite pairs. But I did notice that, and then when it did start to move, it just kept going up and up, and I was like, oh shit, okay, cool. And I ended up making, I think, 35 or 40 bucks off that.
Good deal. Good deal.
Yeah,
you see how gold typically moves right around here, which is literally about 9 a.m. every day. About the same time. So
also, would you be able to touch on how to count pips? Because I suck at counting pips.
Okay.
So like knowing what's a good, take profit and all that, like I suck at counting pips.
Okay, I'm gonna go ahead and do a top down on, let's see, any pair in particular?
Gold, because that's literally my favorite pair out of everything is gold.
All right, good deal. We'll go ahead and do a top down on gold. And I'm gonna remove this RSI just so we have a. Were you guys able to download the template?
Yes.
Okay, good deal. I got a couple more templates that I'm gonna release shortly, probably by the end of next week. I got a template with the volumes. And the volumes go hand in hand with what I was just mentioning about the transactions. So the volumes help you identify when the most transactions on that particular pair are entering the market and where those transaction levels and points of control are to enter. I'll touch on that throughout this week on the bootcamp. But just for starters here on gold, and I'm doing it on gold, but keep in mind that this same top-down technique is used for everything, no matter what chart it is. I pull up the month. I'll of course pay attention to what I'm trading, but for these purposes, just consider just pulling up any chart and doing this exact same thing for any chart. This top-down analysis.
All right, bet. I got a question before you start.
Okay.
Is there any particular, I guess, because I remember studying some of your material, a couple of years back, and you always said study the dollar before we start studying any other pairs or whatnot. Can you kind of touch on the correlation to the dollar and other pairs that we might look at trading, and kind of give us a little a guide map, I guess, you know?
Okay, yeah, I'll do gold. As a matter of fact, I'll start with the dollar. I'll do the dollar, then I'll go back to go back to gold, because the dollar really controls the market.
Okay, okay.
So looking here on this dollar, and just to touch on what he just mentioned, Simone, is the dollar, of course, controls all 7 of the majors. So all 7 of the majors move in response to what's going on with the dollar. So for example, if you pull up the dollar chart first in the mornings and you analyze that it's going to be bullish for that particular day, anything that USD comes first on the pair is likely going to be bullish as well. Anything where USD is the secondary pair is likely going to be bearish. So if the dollar is heading up, pound USD is heading down. Euro USD is heading down. USD CHF would be heading up. USD CAD would be heading up. Gold would be heading down. If the dollar's heading down, gold would be heading up. Pound USD would be heading up. Euro USD would be heading up. Aussie USD would be heading up. And that's just simply because, of course, they're paired against each other. One comes first, one comes second, but anything with the USD first follows the USD dollar directly. So starting here on the dollar, here on the monthly, of course, how are you on identifying trends, Simone?
See, when I was doing this actively, I was way better, but now I suck. I'm like literally a beginner all over again.
Say that one more time.
Now I was just saying, when I used to, so when we first connected, what was it, before I had the baby?
Yeah, I believe so.
And then, you know, adjusting to motherhood, I haven't been able to really be on it. So I'm starting all over.
1 second, let me respond to somebody. One second, I've just got to respond to somebody real quick. All right, so when it comes to reading the charts and reading the trend, of course, this would identify a swing high. This would identify a swing low, the highest and lowest points on the charts. But in this, of course, you see there's several different trend movements. Those are identified by each individual candle's high and low. So a trend would be of course, a starting point at a low with a high, a lower low, higher high, lower low, higher high. So that would identify a trend. And that's identified by the absolute individual candlesticks. The candlesticks, higher highs and higher lows, ultimately create the swings, which create the whole cycle, which create the trend. So starting from here, since zooming out on the month, to start the top-down analysis, of course, you start on the highest time frame, which is the monthly. The first thing you want to identify is the first, from the left to right, the highest point or the lowest point. In this case, it's going to be from left to right, the lowest point, which is here. So from here, what we would do is now identify that this, of course, is the lowest swing low on this monthly chart. Following from this point here, we have an uptrend. As you see, it's identified by higher highs and higher lows. Here's the low. This next candle has a higher low. Here's the high. This candle has a higher high. The candle after that, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Notice how each candle has a higher low than the previous one. Each candle has a higher high than the previous one, until we get right in here. Here's the last peak, here's the higher low, but then we have a lower high. So in this particular swing right here, I don't know if you've heard me say it, but I would be trend over. This trend is now over, and it was finished off by this higher low or this lower low. Because now, as you see, we got a high, a low, a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower low, but lower high. So now this trend would be over. So once you get to a point where you've identified the peak low and you can follow that trend, immediately when that trend is over, that is a new level of support or resistance, depending on which direction the trend's coming from. Now, just looking at that first markup, if you look over to the right, that level is now playing as support. It was resistance here until broken here. So right now, as of what we have here is the swing, the beginning point, swing low to swing high. Then we got this pullback, swing low or swing high back to swing low. And then as you see, price now begins to trend back up. Right here, we got a trend over. Higher highs, higher lows, higher highs, higher lows. We got trend over right here. And we got a small series of lower highs and lower lows. And then right in here, at this particular long green candle right here, eliminated that trend because now this high is higher than the previous one. So then we bounced up, hit that resistance level again from our previous data coming from the left. Then we have another series of lower highs and lower lows, which came and ended at the same previous support level from the left. And then you see this huge rally of higher highs and higher lows, which completely now has shifted into a new zone. And once you start to map it out, you can kind of see these zones being created. So we got that zone, boom, boom, boom. Then we have trend over again, right here, trend over. So now we have another level. We can go ahead and pull this all the way across since we can see that price is there. And this is all you literally have to do on every time frame, but you must start at the highest, which is the monthly, to get a full clear perspective of which way the market's going. You have to start at the highest time frames. You always want to respect the highest time frames first. If the lower time frames don't agree with the higher time frames, I don't even look to enter a position, because when I enter a position, I don't want to be get caught in a 15-minute trend when the 4-hour or the daily is going the other way, because that's when you likely get stopped out or the trade goes completely against you and you're like, whoa, what happened? The pattern was formed on the higher time frame, not the low one, and they didn't match. So now moving forward from where we're at here, I'm gonna actually go ahead and bring this in here. Now we have another series of lower highs and lower lows by the individual candles, which brings us here. Then we got this candle here, which forms a higher high. So that would again be another trend over. Then we have the series of higher highs and higher lows. Back up to our previous resistance level, and you see price reverses. This one candle here now forms lower lows and lower highs. So we would literally come back down. It broke through, it paused right here at this previous support level here, but broke it and came all the way back down. But as you see, it still failed to break a previous resistance level. Once this resistance level here was broken, it became support over here. What they would like, what some people refer to that is as a turncoat support or resistance. And of course, they just simply mean turncoat means it went from resistance to support. And once a level of support or resistance is broken, it's always going to be retested to be validated. It'll always be retested to be validated. So even if all you saw was this here, oh, let me do it like this. Even if all you saw was this here, you would know that price at some point has to come back and respect this level here. Because it was once resistance. Broken here has to be retested before it's validated. So price would have done one or two things. Price would have crashed down to these levels or literally bounced off of this resistance. A bounce would confirm this level has now confirmed as resistance. A break would, of course, would have devalidated or unvalidated that level as support and continued and returned it back to its original state of resistance. That makes sense?
Yeah. So I mean, at what point is that confirmed? Like, okay,
Right
let's
here.
say you see a retest. I know, but let's say you see the retest happening, right? At what point, when you're watching the chart, at what point do you say, okay, now I know for a fact